Being recorded today, so it is very important that you do indeed keep yourself on mute, both for the integrity of the recording and to make sure that everyone can get as much out of it as possible. So without further ado, I will pass it over to Hasib, who will take you through the exam prep.
Thanks very much. Good afternoon. I'm very happy to see so many of you attending this F7 financial reporting exam prep. So let's just get started. I wanted first of all to have a look in terms of just 1 second. Yep. Yeah. So I just wanted to have a look. Just 1 second. I'm just trying to move the slides. Right. Yep. Right. So first of all, I wanted to talk a little bit about the exam format that you will find in the exam. So first of all, you have 3 sections where you have a section A, 15 2-mark objective test questions. Section B, you'll have 3 objective test cases, and each will consist of 5 2-mark objective test questions, and they'll give you a common scenario. The section C, you'll have 2 20-mark constructed response questions. So these, you will really have an opportunity here to actually type this up on the spreadsheet or the Word document if you're doing the CBE format. Section A and B, which are really these objective test questions or multiple choice questions, these are marked automatically. And basically, you just have to make sure that you're putting the right, you're shading, well, not so much shading, but you actually select the appropriate A, B, C, or D, and that just goes through a computer and they normally mark it that way. The section C, however, is manually marked, and this is done by an experienced team of markers. So what does section A have? Well, this continues to examine the whole breadth and depth of the syllabus. We could either get in these questions in section A be a narrative question, or we could get a computational. And I'll go through a computation and narrative question and the approach to that. Really having this type of the wide breadth of the syllabus, you have to be able to cover your whole syllabus to be able to negotiate this in the exam. So you can't leave out stuff. So there isn't like a particular part of the syllabus that's more important than the other. So impairment is equally important to earnings per share, is equally important to deferred tax, is equally important to interpretation, to calculation of goodwill. So we have to have a good understanding of the whole syllabus in order for us to score well in this exam. Section B, what they've done here again is that they would normally give you a passage, and you would have to read that, and there'll be like 5 questions for that. So you'll get 3 of those within section B, and there'll be 3 sets of questions, and that'll come up to like 15 questions. So all 5 questions in each will be for each standalone passage, and there will be a mix of narratives in those questions in section B. Section C, this is where you'll have to prepare some financial statements. So either a single entity set of financial statements, a balance sheet or a profit or loss account. What we've seen the examiner like to do is he normally likes to say, this is the profit. These are 4 or 5 adjustments that you have to make to that profit to get a revised profit figure. So that's normally what you have with the single entity FinStats to give you that in section as first part, maybe 4 or 5 marks. And then you have to put through those adjustments onto a balance sheet, not a consolidated one, but a balance sheet. And then maybe there's a third part which could have a cash flow element, like show me the impact of the movement of property, plant, and equipment on the cash flow. So you'll have to say, profit per accounts, add back depreciation, less profit on disposal of whatever plant. And then you might have in your investing activities, acquisition of a particular piece of property, plant, and equipment, or disposal proceeds. So that's what you normally have inside that cash flow element. You can also get a question treated with consolidated financial statements, either a profit or loss consol or a balance sheet consol. right? So questions asking for both of them together wouldn't really find that, but normally you might get something summarized, and you could also be asked to discuss how you actually compute these. Furthermore, in the single entity finstats, we could also get an interpretation questions. So you would get a question in terms of a balance sheet, a comparative, and a profit or loss account. And with respect to that, you may be asked to calculate 4 or 5 ratios, and then asked to explain what happened to the company during the course of the year. Right? So most of the marks would really go in your explanation as to why these ratios change. So if there was like about 15 marks in this particular question, you might normally get about 4 or 5 marks for the actual calculation of the ratio. And then you normally get about 6 or 7 marks for the explanation on that. So I'll talk a little more about that in a little while. So what are some of the problem areas that we've found? So based on my experience in terms of doing these resets and doing what we call study schools and questions, we find that some of the problem areas in section A and B often contain what they call plausible distractors. What that means is really when you get A, B, C, and D, there'll be 2 of them that will be clearly not the answer, and there'll be 2 of them that will be very close. One would be the answer, and one would be very close to the answer. So that is what we call a plausible distractor. So you have to be very accurate in working out what is the correct answer. So sometimes you may actually get something and it works out an answer, but it's incorrect because you haven't addressed something else. And we'll see that in a little while. In terms of this, you mustn't rush. Yeah, you must take your time and not rush when actually doing these calculations. I advise that you should really read the question very carefully. Now let's look at the 2 types. First, you have a numerical, and then we'll talk about the previous one where we'll talk in terms of a narrative. So our numerical. So when you're approaching a numerical based objective test question, you should take a zero-based approach to the calculation. So don't look at what the answers are. Take the information and work it out. Think about the soundness of each step in your calculation. Write it on a page as you have visual people, whatever information they're giving you. Recheck the calculation on your calculator. And then if after doing that you still can't get an answer, then you want to actually put something in the exam. So take a best guess of which one it is, A, B, C, or D. So in one of the exams, so this came about 2 sittings ago, this was one question here that people really struggled with in terms of getting the answer. So the examination team had gone through this. So this question really asks, let me just go to it, what is the total charge to group retained earnings at 31st December X5 as a result of these consolidation adjustments? So you have A, B, C, and D. So let's look at the fact pattern. So they said here on 1st January X5, Pratt acquired 80% of the equity shares of Samco. So you should really be writing down on a piece of paper, drawing out visually. You have Pratt & Co. Acquiring 80% of SAM. Pratt Co. values NCI, or non-controlling interest, at fair value. At the date of acquisition, goodwill was valued at $20,000. At 31st December X5, the goodwill was fully impaired. In conducting the fair value exercise of Samco's net assets at acquisition, Pratt Co. concluded that PP&E, with remaining life of 5 years, had a fair value of $5,000 in excess of the carrying amount. So here we have an adjustment for fair value uplift, and therefore there will be some additional depreciation you'll have to treat with. Samco has not incorporated any of these adjustments into its individual financial statements. So which one of these is the answer? Is it A, B, C, or D? So what does this test? So specifically, this tests how to write off the group share of any goodwill. And notice what they say here, the group share of any goodwill impaired, and the group share of the additional depreciation relating to any fair value adjustments. So they've asked you about the group share. And remember, we own what percentage of this company? As you can see here, we own 80% of the company. right? And we actually have to do a calculation for full goodwill. That's what that 20,000 was, right? Full goodwill, because NCI is at fair value. So what is the correct answer? Well, the correct answer is calculate the additional depreciation. So the uplift was 5,000. It had 5 years to go. So 5,000 divided by 5 would mean that you'll have to charge your group retained earnings with 1,000. Right? So that would be credit balance sheet, debit group retained earnings 1,000. In addition, they also told us in the question that the goodwill was fully impaired, and that is 100% goodwill. So you had to actually write off to the profit or loss account 21,000, 1,000 plus 20,000. The question specifically asks for the group share. So the correct answer wasn't 21,000. The correct answer was 80% of 21,000, 16,800. So if we to look back at the answer, you notice that B had 21,000. And then you notice that you had 21,000, but you notice the right answer was really 16,800. Had you not picked up the fact that they wanted the group share, which was 80%, you would have put down the plausible distractor of 21,000 being the one that you thought would be the right answer. But the right answer was really taking 80% because the question asks for the group share in the second line, impaired, and the group share of additional depreciation. So that is what we mean by a plausible distractor. When you work it out, you get an answer, but there are two, you have to do a further working to get to the correct answer. So it could have either been 21,000 or 16,800, but it really was 16,800 because they asked for the total charge to the group units. So that's an example of where it is that you have to actually work out precisely what it is and read what the question is asking. All right. So the question is asking, what's the total charge to group retained earnings? All right. So it tests you how to write off the group share, the 80% share. The other 20% would have gone to non-controlling interest, but he didn't ask that. So that is why you have to multiply by 0.8. So a lot of candidates, or a lot of people writing this exam actually put 21,000. So all your workings wouldn't help because this is one where you're shading or you're actually just putting in an answer, and therefore the examiner or the marker, there's no marker to look to see if you actually did the calculation half correct or 3/4 correct. So it's a very unforgiving, this objective test question, right? So you have to be very careful. So that is why I had said take a zero-based approach to the calculation, right? So just take the numbers and work out what they say. Think about the soundness of each step. Okay, so we got the additional depreciation. We understand the impairment, but what they want is a group share. So therefore, I have to take 80% of that. Write it on a page, much like how I did the calculation here. So when I say write it on a page, you should be writing this on a page. Additional depreciation 1,000. 20,000 was the goodwill. 80%, 16,800, right? So then recheck the calculation on your calculator. So make sure you take the amounts, re-add it, you multiply it by 0.8, you got the right answer. So that is how you should approach your numerical. Now, I hope you understand here as well that you really have to know exactly what you're doing. You can't bluff in the exam. You have to know exactly what this calculation is, and you have to know exactly how to do it, and you have to be able to do it 2 marks by 2 minutes in 4 minutes. All right. So practice is essential in terms of being successful in this exam. Let's now look at another one. This is an example of an objective test question where it is a narrative as opposed to a computational, right? So again, for a narrative, read the question carefully, very carefully. Underline the key terms. What is he asking me for? Take your time. Don't rush. Find the correct answer. So when you read through the particular answers that are suggested by the examiner, make sure that you read through and understand it, right? Reread the question. So after you've kind of come to one, reread the question and ensure you didn't misinterpret what he was asking. Then complete the answer. If you're unable to figure out what it is, then take what you think is the most logical answer. because there's no negative market in the ACCA exams, meaning that if you select a wrong answer, they don't deduct marks. You just don't get the 2 marks, right? So you don't lose anything by actually putting in an answer. So let's take an example where it is in the exam people struggled. So this one asks, which of the following should be accounted for as subsidiaries in the consolidated financial statements of Presco? So he gave you 3 options here, right? 1, Gilbert Co. Presco currently owns 40% of the share capital of Gilbert Co. and holds options to purchase another 20%, which it can exercise immediately. So you have to think back. In my console, when do I obtain control? What is control? So that's what he's examining here, right? Is that one where it is that Priest would control Gilbert? Second scenario, Priest company owns 60% of Groves and has appointed the majority of the board of directors. Does that give them control? And then the third one, Presco owns 80% of Arco. Arco is loss-making, and Presco is considering selling it in the near future. Does that make Arco a subsidiary? So he asks you, is the right answer 1 and 2? Is it B, 2 and 3? Is it C, 1 and 3 only? Is it D, 1, 2, and 3? So again, you have to know the detail of this. So what does this test? So what the examiner was trying to get here to make sure that you had the learning outcome was this tests your understanding of the definition of a subsidiary. You are expected to apply that knowledge in 3 simple scenarios. So what was the correct answer? D. And D was 1, 2, and 3. So in all 3 cases, this was a subsidiary. In the first case, he had the ability to get the additional 20% now. So conceptually, even though he didn't own it, he could control the company. So he has control. In the second scenario, he owns 60%, has the majority of the C. So therefore, that clearly would be a subsidiary. And in the third case, he owns 80%. And because he's considering selling it does not mean it is not a subsidiary. It could be under IFRS 5 an asset held for sale or subsidiary held for sale, right? But it still has to get consolidated in the accounts. So that there is an example of where we have to put in 1, 2, and 3. So that is more remembering and understanding what are the elements that must be there for a subsidiary to be consolidated. So that is an example of what you can expect in section E. Very detailed, have to know the breadth of the syllabus. One was on that, those 2 questions were on consolidation. Now, as I spoke before, section B, this deals with case questions, right? This is where you're required to demonstrate a wide knowledge of the syllabus. So what are you supposed to do here? You need to show you're able to apply that knowledge in depth to a given set of circumstances. So in the exam, he had looked at impairment of non-current assets, IAS 36, government grants, IAS 20, discontinued operations, all right, IFRS 5, and he said that wasn't well done. People didn't seem to understand discontinued operations. Earnings per share, not well done. Again, people didn't seem to understand earnings per share. Foreign currency, IAS 21. Financial instruments, IFRS 9, intangible assets. Based on the responses, the examining team was of the view, very superficial knowledge in terms of intangible assets, knowing what you can capitalize or defer and what must be written off to the profit or loss account. Leases, IFRS 16, a new standard that's going to be applicable next year, 1st January 2019. Superficial knowledge demonstrated with respect to this. Revenue recognition applicable in this year from 1st January 2018, IFRS 15. Superficial knowledge demonstrated. I must say that these 2 have technical articles written on the website. So if you go into the ACCA and the students part of the website, there is an article on leases. There is an article, there are 2 articles, part 1 and part 2 on revenue recognition. So you should read those, because those will be up to date as well. It should be in your manual that you're studying from, but the leases and revenue recognition, I would encourage you to read that. IS 8, accounting policies, change in accounting estimates and errors. So people are struggling there between what was an estimate and what was an error. So for example, once you have a fraud and it's material, that's a prior year adjustment. So that's an error. An accounting estimate would be like if you change your method of depreciation. So I was doing straight line, so I went to reducing balance. So that's a change in estimate. And that is only applied prospectively. Property, plant, and equipment, borrowing costs, right? So when to capitalize interest when you're constructing an asset. So if you have an asset that takes a substantial period of time to construct, during that period of construction, you're allowed to capitalize interest on any loan taken with respect to constructing that asset. And you can only capitalize that interest during the period of construction. So he normally likes to say, well, okay, they got the loan on 1st January 2017. On 1st of March 2017, they actually started construction. And then within on 31st August, on 1st September to 30th September, they stopped construction. And then they recommenced 1st October and finished in December. So you have to count out how many months inside of there they are actually working on the asset. So if they started in March and then they stopped in August, how many months there? And if they recommence in 1st September and they finished in December, how many months there? And that will be the number of months that you will be allowed to capitalize interest for, right? Provisions, income taxes. So those are, so you can see in section B, he goes all over the course in terms of here, a wide gambit in terms of the course, and basically being able to prove to him that we understand what it is in terms of F7 and the particular learning outcomes in this particular syllabus. Now we come to section C. So section C is one where you have an opportunity to actually, if you're doing the CBE, to actually go and type this on a spreadsheet, on a Word document. So he normally asks you here, single entity accounts preparation. So we have a single entity, not a console. They may be required to produce financial statements from a trial balance, right? In terms of this. So you could actually do it from a trial balance and a set of adjustments. So what does he try to test here? Your knowledge of presentation of financial statements. So like you start with, key company, and you'll have consolidated statement of financial position as at 31st December 2018 or 2017, assets, non-current assets, and then you have current assets, total assets, equity and liabilities, equity, and then non-current liabilities, current liabilities, total equity and liabilities. So presentation of financial statements, if that was the statement of financial position. Able to identify the correct elements, test your knowledge of a variety of standards. So that's where he starts with, this is the profit and these were the things that we want the profit adjusted for. So what were some of the good points in terms of when people have done that? Well, they had workings that were neatly presented. You normally, if you had a working and then from that working you had to do another working, if you got the working incorrect, you would lose the mark there. But then if you took that number and carried it to the next working, you wouldn't move, and you did that right with the wrong number, you wouldn't lose a mark for that. You just lose the initial mark of the initial incorrect calculation. So that's what they mean, got marks for own figure rule. That's what that concept means. People seem to understand IS2 inventory, also in terms of IS16 depreciation, and also IFRS 9 issue of loan notes. What they struggled with was assets held for sale, IFRS 5, onerous contracts under IS 37. So with an asset held for sale, once you satisfy the criteria of an asset held for sale, then that is that the asset must be available for immediate sale in its present condition, and the sale must be highly probable. Once those are present, then that asset can be reclassified out of non-current assets, property, plant, and equipment, and reflected in current assets as an asset held for sale. Right? An onerous contract comes out of IS 37. This is where you have a contract, and what has happened is because something changed in terms of the economy, you now start to make a loss on that contract, but you can't get out of it. So you are allowed now immediately to recognize all those losses immediately. So you don't have to recognize it as it occurs, but you can recognize it immediately in the P&L up front, right? So it goes away from the accruals concept and it actually takes everything in one go through the P&L. So that's what we use a onerous contract. Now, one of the things in terms of this is that you must always show your workings. So when you type up your balance sheet or you type up your profit or loss account, just to the right or just below, type out your workings. Because this is being marked by someone, they will look at your workings and award you marks. So unlike the MCQs or the objective test questions, here, once you put workings and you can show that you're getting to the right place, you can be awarded marks. So I encourage you just to put your workings just to the right or the left of your answer on the spreadsheet. So one, the marker could find it and reference it, and therefore it can give you marks with respect to it. So that's very important. So good questions. I would encourage you to attempt these two questions in your revision. Triage Co. that came in September 2016. Mustang Co. in September to December 2015. Right? So those particular questions actually gave you a good revision of a wide number of topics within the course. Those two questions. Section C as well also asks you to analyze consolidated financial statements. So you have the single entity, and now we go to consol. So in the consol, people were able to do the calculation of goodwill, and they were able to calculate also all the ratios, return on capital employed, those sorts of things. Right? Where could they have improved? Well, calculation of the gain or loss on disposal of a subsidiary. So this we normally do by taking disposal proceeds, how much you sold the subsidiary for, less three elements, less the net assets of the subsidiary at the date of sale, plus the goodwill, that basically, plus the goodwill as well, that you would have still sitting on the balance sheet, minus non-controlling interest. So when you take those three numbers, you net it off and you deduct that from the disposal proceeds, you'll get a profit or loss on the sale of these particular assets, on this particular subsidiary. So make sure and revise that, how to calculate a gain or loss on the disposal of the sub, how to calculate return on capital employed, so that's profit before interest and tax over net assets, and net asset turnover. That is where you have a revenue over these net assets, right? So that tells you how hard the assets are working. Return on capital employed tells you how much of the capital was basically, what was your return on this capital, and comparing it with the prior year. So comments required you to explain changes in ratios from year to year with respect to the question. All right, so you have to explain those changes. A good question to practice is Gregory Co, September 2016, and Tangier. So those two questions, if you can practice those will basically arm you well for the exam in June. Preparation of consolidated financial statements. Good points. People seem to understand how to do goodwill, how in the profit or loss account to eliminate intra-group sales, how to do the fair value depreciation calculation, and the unrealized profit on stock. So those were good. What are the things you should also, in addition to that, what you should try to improve on, if you don't know this, is how to treat with consideration where you acquire subsidiary in shares. So he normally gives you the information, and you actually are going to issue shares in order to get shares of the subsidiary, and he gives you a formula to do it. For every 2, you get 3 shares. For every 1 share, you give 2 shares. So it's just to follow those instructions to come up with the number of shares, and then he might give you a price for the share and you multiply it. Where he gives you contingent liabilities at fair value, you have to include that in your calculation of your identifiable net assets at the date of acquisition. So normally there you will have something like share capital plus pre-acquisition reserves plus fair value adjustments less the fair value of a contingent liability. You actually minus it to give you the identifiable net assets at the date of acquisition, which you will then reduced from the cost of buying that subsidiary to give you goodwill. Deferred consideration, this is where you're going to pay for something 1 year later or 2 years later. You need to present value it back to the date of acquisition. And normally, because he asks you for the balance sheet 1 year later, i.e. months after you've bought the subsidiary, you have to unwind it. Meaning you have to actually go and compound the interest 1 year and credit liability and debit profit or loss account. So always think about how you're dealing with the unwinding of the first year's interest. Always make sure when you're doing your unrealized profit calculation, whether he gave you a markup or a margin, right? So if it's a markup and it's 25% markup, it'll be 25 over 125. If it's a margin and it's 20%, you just multiply the sales by 20%. When you're actually doing a consolidation and you have the parent and the subsidiary, you normally take 100% of the parent and 100% of the subsidiary, not a proportional amount of the sub. So people were doing that in the exam, so make sure you don't do that. So if it is we bought the subsidiary and sales of the parent were 100 and sales of the subsidiary were 60, then the total sales would be 100% of 100 and 100% of 60, 160. If you bought the subsidiary halfway through the year, then your time apportion the sales. So it'll be 100% of the 100 and 6 over 12 months, 6 over 12 by 60, which will be 30. So it'll be 130, right? So that's not proportional consolidation. That's just time apportion the subsidiary sales, cost of sales. And finally, in terms of this, omission of profit split between the parent and NCI in the statement of profit or loss and other comprehensive income. Normally goes to 7.5 marks. Most people don't do this calculation. So when your revision, make sure you can calculate the non-controlling interest for the profit for the year as well as for the profit for total comprehensive income. Once you get the NCI, then that will afford you 7.5 marks, which people won't do in the last exam. What are the questions I would suggest that you do to make sure you get to terms with this are these 3 questions here. Party Co, you can find that in the September to December 2017 questions. Dargent Co, March to June 2017. And Plastic, December 2014. So finally, to summarize, what resulted in people passing the exam? 1, workings supporting preparation of the financial statements. That's the first thing, right? So you had workings that actually supported the preparation of these financial statements. Then the second thing would have been analysis of discussion points laid out clearly, right, for performance and position. So you actually laid out, well, for the profitability ratios, these are the 3. This is why it moved. This is the reason for why it moved. So it moved because we actually increased selling prices and we are able to reduce the cost of buying from suppliers, resulting in this. Or our gross profit margin decreased by 2% from 12% to 10% because we took on a long-term contract at a reduced margin, and this resulted in our gross profit margin reducing. Right? So you have to explain why that is, right? Don't repeat the same point. Once you've made it, you get the mark. If you repeat it, you don't get extra mark. Conclusions should be based on an analysis of what was included. Completion rate of questions. Make sure that you attempt all the questions in the exam so you get a chance of being marked out of it. Explain what the issues are. And also make sure that you take time to study as much of the syllabus as possible and have a deep and broad understanding of all the standards within the syllabus. So between now and the exam, what I would suggest you do is get an up-to-date revision kit and work out all the questions in that revision kit at least twice. By the time you get to the exam, if you were to do that, you would more than likely, and you understood how to work out those questions, you'd more than likely pass the exam. So the trick to these ACCA exams, question practice. Get that revision kit, do it 2 to 3 times between now and the exam. Don't keep reading over the manuals or anything. Do questions, compare your answer to what is the answer. Make sure you understand if it is that you got it incorrect, what was it that you needed to understand to get it correct, and that is how you should try and pass the exam. If possible, and you could go to a 3-day revision school where people do questions, that will also be helpful. If not, just do those questions in your revision kit. Thanks for that, and I'm open to any questions.
Okay, so if you have questions, you can feel free to type them in the chat section and I will read them. Looks like someone asked about, can you repeat the unwinding, please? Is that, yes.
Right. Okay, so the unwinding is really, for example, think about when you have a fixed deposit and you have $100. If I went and invested $100 today and the rate of interest was 10%, in 12 months' time, I'd expect to get interest of $10, right? So I would add on $10 to my asset, to my fixed deposit, and now have 110. So moving from 100 to 110 is an unwinding of discount or compounding, right? So another way of saying that is if it is 1 year later, I basically were actually the amount that I had as a liability was 110 and my discount rate was 10%, then 1 year earlier, it would be present value in the 110 to get it back to 100. And then to unwind it, i.e. to bring that 100 back to the value 1 year later, I would have to increase it by 10 to get it back to 110. The movement from 100 to 110, taking the 100, multiplying it by 1.10 or 100 plus 10% to get to 110, that movement from 100 to 110, that is what I mean by unwinding the discount, right? Because when you discount, you kind of wind it up, you make it smaller. And when you unwind it, you make it bigger, right? So unwinding means making the amount bigger because of the passage of time. I hope that's helpful.
The next question was, can you show the slide with the questions on consolidations?
Sure.
And I just want to remind everyone too that this is being recorded and will be provided to you after the session. So if you missed anything, you can go over the recording and presentation then.
Yeah. So this was the question here on consolidation. This was the computational one, and there's a narrative one as well. And this is how we got the answer.
Okay, so are there any other questions that people might have that you want to ask now? Okay. Is the CBE exam going to be harder in any way?
Well, the only way it would be hard is if you're not accustomed to using a keyboard and typing. So once you're accustomed to doing that, in terms of doing the multiple choice questions, no. In terms of if you're accustomed to writing and not using a computer to actually type out a balance sheet and to do workings, it might be harder in the context of actually that, the way you're actually putting the information into your answer. But in terms of the type of question and the thinking behind it, it would not be harder from that perspective at all. Yeah, so like my students here and where I teach, they have to get a lot more accustomed to actually using the keyboard in order to put in their information because they're accustomed to not doing that.
Did you say not to calculate a proportion in consolidating statement?
Right. So in terms of a consolidation, so one of the feedbacks from the examiners was really in terms of not to use proportional, that second to last point, not to use proportional consolidation. What that meant was, if I had sales of 100 for the parent and sales to the subsidiary of, let's say, 50, right? And this was a 80% sub, you wouldn't end up with 100 plus 80% by 50 for sales for the console. So when you say proportion, you wouldn't take the 80% and multiply by 50. So that's what they mean not to use proportional consolidation. So some people were doing that because it was an 80% sub. You're actually supposed to put in 100% of the results. In other words, 100 for the parent and the whole 50 to get 150, and you deduct out an amount later down for non-controlling interest. So that is why not to use proportional consolidation, right? So that is what the examiner was saying people were doing, which was incorrect. Now, if it is your only body subsidiary halfway through the year, then you could only put in 6 months of the sales. So then you would take 100 plus 6 over 12 by 50, which is 25. So you get 125. So that isn't proportional consolidation. That is time apportioning when you bought the subsidiary. So there's a difference between when he says proportional consolidation, which we don't ever use in consolidation, as opposed to time apportion when it is that we put the post-acquisition profits. I hope that clears up that.
Okay, the next question was the ratios. Why do you say the ROCE increase?
No, I was just making a point like a return on capital employed. You might have something, or you might have, well, in a ratios question, they will normally have to calculate the return on capital employed in the comparative year and in the current year. So the only point I was making is that if there was an increase,
Let's see. Hold on a
sorry?
minute.
Yeah, so the only point I was making is if there was an increase, if those ratios showed an increase, you needed to explain to the examiner why there was an increase. And in the fact pattern, in the question, he will tell you why it increased. It could have been when it might have increased for some reason in terms of you became more profitable in the year because you had something happen, a new contract came in, and this was really good for your company, and you made more money with the same amount of assets, and therefore your return on capital employed increase. So I was just making the point that you need to explain in the answer as to why something changed from the prior year. And I just use an example, being return on capital employed may have increased because of so and so.
And then the next question is there any way to practice the CBE section C of the exam?
Yes, you can go on the ACCA website and there are free CBE exams and you can practice. There is that on the ACCA website. So just going to the ACCA website, the students part, go into F7 and you will see they'll give you an option for CBE and you will be able to practice there.
And finally, are there any templates going to be given in the CBE or will it be completely blank spreadsheet?
Completely blank spreadsheet. You will have to actually put in the format for statement of financial position, profit or loss account. So there wouldn't be any formats given.
Okay, well, oh, nope, here's another question. Okay. I'm sorry that you can't sit them in Antigua. You know, they are becoming more common, but that's unfortunately not a question that we can answer for you today.
Sure.
And looks like that might be it, but oh, nope. Slide with the last set of questions to try. They'd like to see it again.
I think I have it up. Party code, Dargen code, plastic. Section C. I just put it up.
Okay. Are there any other questions? All right. Well, with that, I just want to thank everyone for joining us. And Hasib, thank you for this. Oh, no, here's another question. Just as I thought it was in it. Okay, should you start an exam from section C first?
You can start the exam from any place you're most comfortable and where you think you have the easiest marks. So the answer is yes. You can start at section C, you can start in section B, you can start in section E. Doesn't matter. Once you clearly recall, well, this section C, and you're actually doing question, whatever it is you're doing. Not a problem.
All right. So please let me know if you have any other questions. We'll wait another couple seconds for you to type if you have one. Otherwise, we will send out this recording for you, and we appreciate you joining us today. And thank you, Hasib, for your time.
Yeah. Good luck to everyone in the exam.
Thank you so much.